So good morning, guys. Um, good afternoon, good evening, depending on the time you're watching this. So this is a demo account, and I'm trying this. I'm trying this test on a $31 on a $30 account. Sorry. So this is a guide to help those who do not have a big account. Okay. The that time I started the test on um flipping a $50 account. So today I've decided to do a challenge on flipping a $30 account, as you can see. And this is the lot size you can use to flip your account. So in a situation like this, you have to follow the trend of this market. Okay. So as you can see, that was 30.00. Okay. And for the purpose of education, please, this I did this so that just to prove to you that you can actually raise a small account safely. And what are you seeing? I'm actually still on a downtrend, though it seems like the trend is going to be exhausted, but until it's exhausted, we don't know what happens. And you know, when selling boom, you cannot actually use a stop loss except you are buying boom because it booms upward. Okay, so it is only when you're booming upward you can set a stop loss downward so that when the ticks are coming down, it will stop you out properly. But when there is a boom this way, when there's a boom this way, like what you have here, when you have a boom like this, you cannot stop it. You can use a stop loss in a boom. You see this? So I prefer to actually buy boom because it allows me to use stop loss. So how do I buy boom? I prefer to buy boom when it's actually on an uptrend this way. For example, it's actually buying. My conditions for buying here is that the 20 moving average, or the smaller moving average, the 20 and the 10 is on top of the 200. So this is the 200. This is the 200, the blue line. This is the red, the 20, which is the red. Okay, this is the 20, and this is the 10. The purple line is the 10. The red line is the 20 moving average, and the green line is, sorry, the blue line is the 200. So I use the 200 for the trend, the master trend. Being a 5 minute chart time frame, the 200, the position of the 200 on the chart tells you exactly where what H1 is doing. So whenever you see charts, 5 minute charts or 1 minute charts on top of the 200, it tells you that presently H1 is doing a buy. It's having bullish candles. So when you see it below like this, you know that when you see price below 200 moving average, you see that price is actually trending downwards. Whether it is the range or whatever that is happening on H1, we don't know. It is what we see. It is the vision of the moving average that we see. Okay, so right now, market is still trending downwards. That's why you're seeing all of this price still under the 200 moving average. So it is better and safer to be selling in this market, not doing otherwise. When we try to catch, let's say there was a trade I tried to catch a spike on, and after taking that trade, you know, I took that trade when RSI was at exhausted position. Okay, if you don't know what an RSI is, this is what I mean by an RSI. Look down here, you'll see this. You'll see this right here. This is an RSI, okay, a relative strength index. So I use these levels to know this is the levels here. When it is about 22 or 10, I use 10 as oversold. I use 90 as overbought. So presently, price is at 22. Okay, so it's still coming down. It's not yet at our official oversold zone that you should be thinking of buying. And even if it gets oversold, you have to still wait for other confirmations. Price needs to start getting above the 20 moving average, which is this red. Okay, price needs to get above it, just like it is below it now. Price needs to get above it. And for me, when it gets above it, I want to see a retest like what we have here. It's not just go above it. After getting above it, it retested the 20 and gained the strength to continue going. This was the retest. It broke here. After breaking this point, it retested this point, gave a bullish candle. That was how it continued all the upward movements from here up. And that was enough pips to catch. So also when the market was trending downwards, price broke and came down and then did a retest on this zone, closed back under, and the rest of it, you know, was profit. So I like to go with the trend, okay? But sometimes when you're trading boom, selling boom, okay, you're doing that at your risk because anytime this market can just spike and go a different direction. So you have to use a lot size that you're willing to lose. That's why I prefer to trade, you know, this kind of strategy on a small account just in case something goes wrong. Because guys, I'm not going to tell you that it's going to be all rosy. You understand? It's not going to be all rosy. Sometimes you might be in a market that is just about to change direction, like what you're seeing here. Example, somebody who was here, who started this trade right here. Okay. Somebody who started this trade, let me use this. Somebody who took this trade around this zone. Okay. What do you think would have happened to that person there? That person would have freaked out. Of course. You can see that was enough pips though. But just one spike, okay? Just one spike came and took all the efforts away. Just this spike here came and took all the effort. This spike you are seeing now. This very long candle you're seeing. Where the red arrow is touching, you know, all of that took out all the candles you hustled from here. Okay? It took it all out. So just imagine this, all of this movement going up. Meanwhile, this trade started from here. The entry was here. You can imagine. And some profit was made. Just when the spike came, everything, went away. This spike just came, took it up. So in this scenario, I prefer to buy boom so that I can use my stop loss, because on this trade, your stop loss will not work until, let's say you were here and you took a stop loss here at this zone. Let's say you were taking this sell and your stop loss was, protecting the profits already. And then this spike happened. The stop loss will not be activated where you kept the stop. It's going to push the price to wherever it stops. So if the spike had reached somewhere here, for example, that is where this loss would have stopped on your accounts, and that's not fair. So you can see that even with this least loss size, okay, our $30 has become $32.83. This is something. I mean, $2 something. So if you keep doing this every day, in the next 30 days, you'll see that even if you were doing $2 every day, okay, growing a small account, better than nothing, right? 2 times 30 is going to be $60. 3 times 30 will be 90. I mean, you actually achieved something instead of being greedy and, losing it all. So I like to do the retest a lot. I like to do this to be in line with it. I allow the moving averages to cross and then allow price to bounce. Like this was supposed to be my entry if I had seen this on time, on 15 minutes. Okay. So this would have been my entry on 15 minutes. But on 5 minutes, it wasn't our entry. Our entry was when price came on below here. Okay. I like to do a lot of retests. It gives me a good position to place my stop loss if I was buying. Because for sell, there's no need for a stop loss. It won't work. Yeah. It won't work. So if you want to know the settings of my what settings I use for my trades, for this kind of trade to grow small accounts, you need to check my next video. But the quick one, you just use the F right here. Just use this F right here. This F, and you go to plus, you take moving average. Take note of the settings, okay? 10-0, linear weight, weighted close. Just follow it. Mark it. I don't want to be long on this. Done. You go for the second one. You choose 20. The parameters 20-0. Please just take note. Pause this video and take note. I've already done this in the previous video. Just look for it. The third moving average, which is a 200 moving average. Shift 0. Method smoothed. Close. 4 pixel. Color. Any color of your choice. But I like to use this. The colors on my chart are my default colors on a white background. So you choose your own colors that you will never forget. Each time you see it, you know where price is. So that is it. So right now, I've done a top-down analysis, and then for the indicator window, you make use of the MACD. Please, just look at the settings, copy exactly the settings, okay? Do not change it. Exactly. Then you click done. The last indicator is the relative strength index. We are not using this, actually. We're not using this color. The colors, actually. I just use something that will match with my background and then the color of the MACD. What we are interested here is this period 7, okay? Sometimes I use 7, sometimes I use the 14. But for this, we use the 7. Like I said, I'm not really interested in the period, but I am interested in these levels. 90 for sell, 10 for that's 90 for overbought. So we were looking to sell. 10 for oversold, we're looking to buy. And then the other one, 0 is nothing. So some people use 50, okay, to be the middle level. Nothing to be done. You wait there or you take profit there. So when you're done, you click done. Okay, so my trade is in progress. Okay, so you can decide to take off this profit. I can decide to take it or I can decide to leave it. But I actually have, this market can spike, okay, back to this place to retest 20 and then continue. But why I'm going to be on this trade is because H4 is a bigger time frame here, and H4 is actually, this is H4 time frame. This is actually my continuation pattern on H1. Price has retested, price had retested my 20 on H1. So on H4, I know this is a bigger time frame. I cannot be playing around trying to be smart, trying to look for buy when market is busy telling me, hey, we're looking for sell. So this is it, what I was telling you. This is my retest. This was a retest, though it went out, but it came back. This retest went out and then it came back. So everything under this zone, we were looking for just sales. Now let me show you what I did here. Why you see me using this box right here, this very box, I'll show you why. While price was trending under H4, okay, I needed to, do a back test to see what price will likely respect. Okay, so this was what happened when price closed back under it. Okay, I took note of this. Now let's go back to the smaller time frame and see how price reacted on the 15 moving, or sorry, on the 15 time frame. This is H4, so every time frame has its child. Every bigger time frame has its child. Okay, the H4, you go, if you're looking at the H4 for your top-down analysis, help you to know the trend in which you are safer in, so you don't get to lose money. So even if you're in a drawdown, you'll be able to know when to hold and when to get out, because you have to know when to be in a trade and when to exit a trade. That's the only way you can make money. You will not just stay there and forget yourself and forget that your money is at stake. Anything can happen. So this is H4 selling. You go to H1, you can see the shaded portion. Every opportunity here that flight was a sell, except for the pullback here that happened in the buy. There's a reason why this is not for this video. I did it on my two previous video before this one. So you check that when I was going the $50 account, I explained why I took the trade. If you go to the 30 minutes, you see what is happening. All the retests after price, crossed 20 moving average, and after the 20 and the after these two crossed, okay, these two moving averages here crossed, you see that prices has been selling. This was a good place to re-enter this trade, a retest here. This would have been a good place to enter this trade here, and all of this would have been yours in profit. So I like to do a retest as long as boom and crash is concerned. I wait for it. If I don't see it, I don't take it. So let's go to 15 minutes. We keep going down. You see the same location where the arrow is was a retest on 15 minutes, and you can see all of this came down. So I like to go for retest. Please take notes. I like to go for retest. If H4 is saying I am selling, just be looking for a retest sell and stay safe on it. You can see our trade is progressing. So let's go down to 5 minutes. We are still looking for possible entries if we were on this trade. So you can see when price came, okay, look at this. Would have been the entry. It would have been a little bit later on 5 minutes. This was the first entry, okay, after the cross. This market crossed right here, okay. This cross took place here. Two moving averages crossed down here. This was the first retest. Okay, that was the first retest by my strategy. And this was the main entry, because price came under it eventually. This was the main entry. This was another entry. Every spike that closed back under it was an entry. This was an entry, this was an entry. So this is how you can open multiple positions if you were quite on time. This was an early cross. So I prefer to trade, those signals that happen very close to the 200, This is my 200. This blue is my 200 moving average. So every trade that happened close to it is actually my best trade entries. So this was the closest. This was actually the closest. These were the closest entry points for this trade. So let's look at 15 minutes. If you're a type that you're not patient, waiting for 5 minutes, you can just wait for 15 minutes. Like if you don't know how to trade 5 minutes, you can wait for 15 minutes. This retest on 15 minutes happens every day, either on a buy trend or on a sell trend or on a downtrend. Look at it here. It happened on the 11th of September. Okay, when it was buying, it also happened on the 11th of September. When it was selling on the 10th of September, it also happened. Okay, look at the dates. So take notes of the dates down here. These are the dates we're working with. These are the dates here. So you keep looking down here for the dates. Okay, that's where we can get the dates down here, down below the charts. So this trade came, I took this trade in a late position. This market might spike to retest because of where it is located. So it can spike because of this zone. Okay, and I wouldn't like to lose that profit. But since the H4 time frame, I know that this trade is going to be a sell for a longer time. And also I have a reason to hold this trade, but I also have a good reason to exit this trade, because there is something happening here. Where you see this blue, okay, where you actually see this blue line, price is supposed to pull back to that place any moment. Today or tomorrow, price pull back to this place. It might happen today. It might happen with a long spike. Of course, this is a downtrend. You cannot control this kind of spike that will happen here. So you can see this. Why did I say so? Price came down without the 20 moving average. Price moves to the 20 and the 10. more than it moves to the 200. 200 is just a guide. So for price to have come down, okay, to this place and left the 20, it shows that soon there'll be a pullback in this market. Okay, I'll do another video explaining this better to us. Okay, but for the purpose of this video, we took that trade just to make sure that we add some dollars to this account. So once it gets to, if it gets to $5 without spiking, we will close this trade. We have made $5 out of $30. That is more than 10%, guys. So the smaller your small account can actually make you be greedy, okay, and not know how to manage your account well, because what we've just made now, let's say you were trading with a 1 million account and you've made more than this is $3 is already 3% and 10% of these accounts. So if you were trading a $1 million account, for example, or a $100,000 account, you know what 10% is already. I mean, it's enough money. You would have been out, but because it's a small account, you'll be tempted to be greedy, and then before you know what is happening, you're even losing the little one you've made. So guys, we have to pay attention to this, because any moment from now, it can spike, and I don't want that to happen. So this is it, okay? This trade is still holding, okay? Which, of course, if we leave it this way, it can actually give us some good, pips. But it's approaching at that support level, and I think we should end this trade and continue later. So, but for now, we are good to go. This is it, okay? It is not difficult at all. It's not difficult at all. So, what's the next thing you're going to look out for, okay? Why I took this sell is because this the MACD right here had already crossed for a sell right here. The MACD had crossed for a sell, and so when it did cross for a sell, all I was looking for now is a sell position. It crossed here for a sell, and so this was where this market crossed for a sell. Somewhere around here was where this cross took place. Okay, that's where the cross took place. So I would have been looking for short entries here from 5 minutes. I'll go to 5 minutes. So now this retest, please take note of this retest. This retest took place while price was still below our medium level, our mid level. Price was still selling. Price had crossed for a sell. It did not go back up. Okay, it still maintained the level down here. Price did not go back up like this to cross back. If you can see, price maintained here. So this was the reason why I took this trade, or this is the reason why I would have taken this trade. And then let's still see it on 5 minutes, because I took this trade on 5 minutes. Okay, so on 5 minutes, you can see that price did not go back up. Even when it spiked, price did not go back up. The cross is still here. I had to reduce it because it's 5 minutes so I can see it very well. You can see the levels, what I'm saying. So when price came down, as they said, I checked 15 minutes, I discovered that price did not go down. So I had confidence to enter because the spike had already happened. The spike here had already happened, and price still stayed around the zone we needed it to be. It didn't go against the zone. And also, of course, what we can see is the price did not break out of the zone. It still maintained the zone and kept coming down. That was why I took this trade. So I have made more than 10% on this first trade, and I think it is wise to actually go off. This is 35. So if I keep doing $5 per trade, if I see another retest that is also respecting this trend, for now, the MACD is telling us look for only sales. Please take note. MACD crossed for a sell and price is actually below 200. Don't forget, this is the rules. This is the rules. Price is below this moving average, please. This is the formula I call. So I call this formula 200 over 20, please. So when price is like this, 20 is below 200, I look at what price is saying. Now there was a cross here. All I'm looking for in this market is sell, 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 sell. Okay. The same thing also when price is above 200. When price is above 200, we want to do what? We want to do buy. The same condition goes. Now let's open this up. Price crossed, okay. Price is actually above 200. Don't forget. And then there was a cross here. There was a cross here. Price crossed here. Price crossed here for a buy. And I'm sure this cross took place around here. And then there was a retest. Don't forget, we are dealing with a retest. The retest helps you to know that you're safe. This was the entry point. That was the entry point in this market. And the entry point, price stayed above. Don't forget, the entry point corresponds with where price was. This is the secret, guys. This is the secret to trade this and be successful. Price stayed above. Okay? Let me do that again. After the cross, price stayed above the mid level. This is the mid level. Price is above the mid level. And then this retest happened here. So the rest of it here is our profit. So in this case, you can use a stop loss very close Once you take this trade, this is your stop loss. So as the trade is progressing, going, you can adjust the stop loss to make it break even. Break even means your account is safe. Even if this trade decides to come back and you were not watching, it will hit you, it will stop you here in maybe at your entry level at a little profit without you having to lose anything. So this is what I'm talking about. We had $5 in this account. What happened? There was a spike. Let's go back there. You see what I'm saying? The spike took out how many candles? 1, 2, 3, 4. So this is what we are saying. But thank God it's a downtrend. The spike was not too much. I want to believe that this trade is going to continue coming down. Why? Because H4 says it's selling. And daily still has, look at my green line here. The previous support is where you have this green line, this green horizontal line. This is the previous support in this market. So I am expecting price to finally touch that zone before, leaving. So my take profit is supposed to be here at this zone, somewhere close to it before, because once price is approaching this zone, there will be a lot of long spikes. 1, 2, 3, 7, 9. Let me set this the take profit. 1, 2, 3, 7, 9. Somewhere close. 1, 2, 3, 7, 9. So guys, please take note. 1, 2, 3, 7, 9 is where my take profit is. But if it doesn't get there before then, it means I will lose this trade. But I don't want you to lose. I just wanted to show you why it is good for you to have take profit and considerations. So I still believe this market is going to sell because H4 is still selling. And of course, H4 is a bigger time frame, it's a big boy. So we are going to recover back that money before any other bigger spike happens, because price is still a downtrend for now. Until price approaches that place, you can see price has not gotten to that green horizontal line yet. So we can still get back our $5 and leave this market. So I'm anticipating a buy in this market, but that is until price gets to this green, until I sight this green on the 5 minutes and 15 minutes chart. Then when I sight it, I want to see price give us a buy signal and a retest for a buy. The retest has to happen on the 20 moving average. Once the retest happens on the 20 moving average and price stays price stays on top of the MACD level, buy level, like this, like what you have here. When price stays above the level, like what you have here, price was still above here. And then if price is on top of the 20, this retest here, for example, when it happens for a buy, is what we are going to buy. Okay, so for now, we have to wait for this confirmation. That is the safest way, guys. The safest way for you to raise your money. Okay, there are other people teaching other things online. You can decide to choose what I'm telling you. You can decide to follow what others are telling you. But by the time you start trading, you realize what I'm telling you is true. It is safest to follow the trend. And then take note of what MACD is telling you. If MACD is telling you I am selling, just be looking for only selling opportunities. If MACD crosses for a sell, please just stay on this sell and be looking for opportunities. Okay, just take a look at what happened there. Take a look at what happened there. This is where this market crossed for a sell. So this is where this market crossed for a sell. It is this candle. This is where this market crossed. This very candle was where this market crossed for a sell. You can imagine. So just imagine if you were buying instead of selling. So this market said sell from here. What do you now do? You go to smaller time frames and take your entry. Let's say you saw this. Now, ever since market said sell, price stayed below. Like I said, price still stayed below the mid-level. Okay, price maintained this mid-level, which occurred from here. So this was an entry 1, entry 2. These were your entries. You would have still made money if you were to just be playing based on retest. That was a very good opportunity for you to take the trade. Okay, that was why I took this trade, guys. That was why I took this trade. So price was still at the median level. Okay, that was why I took this trade. So if you had a big account, this is a time for you to make money. Immediately. This is it. You take this trade and you're going down with it and you're cool. I mean, even if you have to be waiting for just one retest on 15 minutes, okay, this is it. This was a buy trade, a retest that happened on top of 200, on top of 20, and all of this was yours to catch. This is a lot of money, guys, depending on your account size. So the bigger your account size, the bigger your profit, of course, the bigger your loss. The smaller your account size, the smaller your profit, and of course, the smaller your losses. So you decide what you want. So thanks, guys. So this is it. We'll be growing this account and I'll be keeping you updated. Okay, so just follow what I'm telling you now. Okay, there was a spike, but nothing happened to the account. The highest that can happen that if it spikes out of this zone, this very zone, if it spikes out to anywhere here, it means we are closing this trade in the loss. But don't say it will come back. You're not sure. It might keep pushing and keep pushing up. So don't ever say that it is okay. It might not be okay. Don't say it is going to return. It might never return. Don't ever think that when market goes against you, that is going to return. You can keep doing this and keep going up, and there's nothing you'll be able to do about it. So stick to your plan of risk management on your account. So for $30 account, while you start, $5 is okay, $10 depending on the length. Like now, we enter this trade too far from the 200. So there is need to be cautious because price is approaching another support. So don't trade blindly. Don't trade without knowledge. Look at where price is. Price is locating is trying to get to this point. And like I said, price is going to go back to this place here. So there's every tendency that anything can happen here. So you have to trade with wisdom. Okay. Keep your account safe. That's what we came to do. We came to make money. We didn't come to lose our money. Okay, guys. So for now, I'll leave you to test it. Please, before you do anything, try this out in a demo account. Please don't do this on your live account until you've understood properly, until you've tested it out. Please don't do it on your live account. So this is what I'm saying. Price is really reacting around this zone. We had another spike that reduced our profit again. Okay, you can see this. So you cannot be trading with emotions though. You can see what is happening. Price can decide to go away and leave us. So we've lost 3 candles. That's painful. So we should have been out with our $5. So you decide what you want, if you're going to wait for a take profit or you're going to come out. So once I see $5 on this trade, guys, I'll be out. But if I see a spike away from me, it means I'm going to lose something. But I won't lose all of my accounts. But I still want to be in this trade because I still believe that the market is not done. There's still a little sell to be done. It might take place in the next 2 hours. We might be done. It might take place now. But this market is still a sell trade for the time being. So guys, thank you. Please do not forget to subscribe or don't forget to give me a thumbs up. Okay, hit the notification bell so whenever I upload new details, you'll be able to have first-hand notification. Okay, and then please help me. Okay, help me. Let's go viral. Help me and post the strategies and help a lot of people out there. A lot of people who are trying to make money. Who are trying to drop their 6 to 9 hours jobs, 12 hours jobs, 11 hours jobs. Some women out there trying to build a life of theirs, taking care of their children and making money from home. Please send this, share this video to them and let them know that they can actually make a living. They can start something small, okay, until it becomes big. Thank you very much. I remain Dynamite FX and see you in our next video. Okay, I'll be coming with other contents to help you out with your trading. Thanks and bye.